Sorry about that, guys. Sorry about that. So we are recording now. We definitely don't want to not do that because we want to make sure that we can load this up so that you all can revisit this, and for those that weren't able to attend today. So Omar.
No problem. No problem. So so like many of us in our industry of real estate, we either get in working with a friend, or we help out with a transaction, or we buy our own home and say, hey, I'd like to learn more about that. I understand you make a pretty good living from that, right? For me, it was lending, and mainly in affordable housing, only because there are a lot of moving parts when it comes to just the money aspect.
Mhm.
Forget about the contract and everything else. And the problem is that in all of that excitement, there's a lingering feeling of like, okay, 30 years, so many tens of thousands of dollars, and I'm not 100% sure how this works. Now, our team, one of the things we do is we participate a lot in the 8-hour HUD class that's required for
Right.
grant programs, the COT, et cetera. And specifically, we participate in the 1-hour mortgage. When I tell attendees all the time is like, the information is available. Don't pressure yourself in expecting to be an expert at the end of 8 hours,
Okay.
but seek out the information and work with your real estate professionals, right? I think real estate agents, in my opinion, a real estate agent is the most influential person in the transaction, okay? And then I'm saying that as a lender, and it's not diminishing what I do.
Mhm.
It's just, because I bring the money, I think I'm pretty important.
Absolutely.
But this transaction is created by a real estate agent. The real estate agent listens to a home buyer as to what they're looking for and what they want.
Mhm.
And the reality is a loan officer can do as many pre-approvals as possible. If we don't have a contract for sale, we're null. So as a realtor, your home buyers are always going to have most of their confidence and comfort with you.
Yeah.
As long as I've been lending, if I request something from a borrower, they'll always go to the realtor and he's asking me for this.
Mhm.
And well, call him back, and if he's asking for you, that's fine. But it's just there's that higher level of comfort there. So what I always like to see is that realtors at least familiarize themselves with like what they're looking for, or what a customer, their expectations. If someone comes in and says, I want that 30,000 from the city, I want to live in Webster. Doesn't go
Yeah,
out there,
right.
but there is 30K. Let's look over here in these areas.
Mhm.
And as a lender, I've always tried to communicate with realtors from the standpoint of like, for a banker, everything is black and white. It either reconciles or it doesn't. But if I can communicate that to a real estate agent has gotten to know a buyer's family.
Mhm.
Real estate agent has spent time with a buyer,
Mhm.
right? So maybe there's a better way to deliver that message, unless the buyer is just like, give it to me the way
Right,
it is.
right.
So communication is really important. And I never get tired of saying that, especially in real estate in general, but especially in affordable housing, because these folks are looking at us like, I need your help,
Mhm.
right? Tell me what we're doing. So when it comes to lending, as always in banking, there's a lot of fine print. That's never going to change. But the questions and the revisiting of information is pretty important. I do business in 2 languages with a lot of different family type units, a lot of clients with different priorities. Some people, I'm gonna hold this thing for 5.5 months and then I'm gone.
Mhm.
And others, this is it
Mhm.
right here. So there are different needs, but one need I think is important is that we understand money. And I'm saying that now, not only as a mortgage lender, but as a career banker. And I'm going to say, I think if there's one thing we know about ascendancy and establishment in this country is there's got to be money. There's got to be assets, right? Our home, our primary residence is usually, for most of us, going to be our most valuable. But then what are we doing on top of that, right? And do we understand how money is going to work so that our money isn't being used in a way, contrary to the ideas that we have, right? When it comes to mortgage lending, let's figure out how that machine works so we can make it work for us. In this market, it's very cliche for mortgage bankers to tell you rates are lower than they've ever been.
Mhm.
The stats are there that they are. And that's a fact of the matter. We have a weekly community land trust meeting, and on that call, I shared with our partners that rates have gone up a little bit over the last couple of weeks. And I said, yes, 2.875 doesn't sound as good as 2.625. But that's still really cheap money, right? One of my colleagues at work, we got into mortgage at about the same time. And I said, weren't rates about 6.75? She said, no, they were like 7.5. And she was right. So money at 3% is great.
Right.
Cheap money. So we have that going for us. And those lower rates also allow us to buy more houses, obviously, because we're paying less interest. But we're able to capture an asset that is going to cost us less. So that's very important, that investment. Number two, obviously in affordable housing, we work with a lot of customers that feel like buying a house is like a really far-fetched idea, right? Owning something that's mine. Maybe it's their previous family dynamic that dictated that idea, or maybe they've had some life experiences that didn't go so well, and they're feeling like I'm never going to rebound again. And the key is, like everything else in life, is to break it down to the smallest unit and take it one step at a time. You'll hear a lot of discussions about credit, but it is what it is. We just have to work on it, and we can make it work for us. And there's some enhancements to that. When it comes to borrowing money and loan to values, and obviously in debt to income ratios and things like that, if we can plan our expenses a little bit better, then we won't be as tight, right? If we recognize things like cars being a dissipating asset, payday loans being a dissipating asset, we really commit to those ideas, our attitudes about spending are going to be a little bit different. And those are the steps that you start taking from either getting into a home or improving a situation that needs work, whatever. And most borrowers, when they're working with the real estate professionals that are reminding them that, like, this is going to be work, but as long as this is a priority, you're going to benefit, or your family's going to benefit. It's the stats are there. Children grow up in a home that is owned by their family. There's a different sense of ownership there, as opposed to renting, right? And there's nothing wrong with renting. My grandmother rented the same apartment in Chicago for 19 years and was very proud of the fact she paid her early every month. She didn't walk away with anything. A lot of pride, but that's it. And renting is good for a short term or a shorter term, but in the long term, if we're going to invest that kind of money, ownership should be a focus. It definitely should, and I think it's also contagious. It's like, you bought your house, right? Who'd you work with? What kind of loans you get? Where'd you buy? I heard there's a new neighborhood over there. You go check it out. It's fantastic. Yeah. We live in a city with a very ideal real estate market. It was the Sheraton now, I don't know what hotel it is, where Mayor Turner announced that he was going to be running for mayor. And it was, I think the function was HBREA's gala. Yeah. Right. So this is like 2014, 2015. And I think it was appropriate that he announced that at a real estate function because of his connections and his dedication to real estate and the importance of real estate. Mayor Turner has done more for affordable housing than any other mayor that I've been originating has done. Not that others haven't done anything, but he made certain commitments that are key, right? Number one, he took away the multiple to figure out how much down payment people get, and made it a standard, right? We're going to go 25 across the board, and we're going to raise it to 30, right? He did. He promised that we were going to raise the AMI limits, the area median income limits, to 120, and he did, right? So we live in a city where our municipal government is dedicated to affordable housing. It's not just talk, right? Number two, we're adopting programs like the Community Land Trust that support that initiative, right? So while we're doing those things, let's continue to proliferate and share the information, amongst our various trade organizations our networking groups, et cetera. I think everyone is guilty at some point of thinking, like, man, that sounds fantastic. This is going to be easy. And then you kind of take a look at it. It's not. As a lender, the conversation that I have with many applicants is like, okay, let me get you to fly. Well, I don't know about my credit. Listen, let's take a look at it. You know, nothing bad's going to happen. You know, it means, well, I think it was such, and well, let's take a look at it. We'll know what we need to work on, right? You know, maybe there's something on there that shouldn't be on there. Maybe there's something that you already took care of. It's still on there, right? And then as a banker with a credit report, I can tell you, you see this expense right here? This is why you can't buy the house you want. How valuable is this here? And you see all kinds of scenarios. Like I had a borrower that had a dispute with her kid's daycare. And so they hit her for a charge off $100. She wasn't gonna pay. She hadn't paid for 3 years. And I said, how much is you're gonna pay? Right? You're gonna pay one way or another, right? So, you know, we called the creditor and she settled out. You know, we move forward at a better interest rate, right? Little things like that, when we do the math to figure out, okay, I didn't want to, but I'm gonna have to. And in the long run, it's gone. There are a lot of ideas about credit, like letting things age for 7 years and things like that. And I'm not a credit repair specialist, so I'm not gonna tell you it's true, it's not. In my experience, though, there are methods to address certain things and they may go away, but they may not go away permanently. So what I always impart to borrowers that may have issues like that, they're like, okay, look, here's the information from the credit report. Give these folks a call. I offer a little coaching. Just don't tell them you're buying a house. Tell them you just want to find out about this because you didn't know it was on there. And then if you really want to go at it and settle it out, let's wait till the end of the month. Because then that's when they're trying to settle out all that stuff. Even collection companies have quotas. So little advice like that sometimes can be the difference between qualifying for the home you want and not. But it's work and it's very granular. With the community land trust program, which is the main reason why we're having this discussion today. First and foremost, this is a new transaction to our city landscape. There are several real estate professionals that are having success. They got in and they went after it and they got to know the program. And little by little, they've added lenders, more real estate agents are participating in it. Okay. I did a presentation at Fifth Ward CRC on Saturday, and my mortgage slide, the subject of shared equity transactions came up, and there were some expressions in the crowd that were not very positive about the CLT. My opinion about the community land trust is the same opinion as an arranged rate mortgage. There's a time for it. There's a situation where it's appropriate. Doesn't mean it's going to work for everyone, right? But if we understand the transaction, we understand the benefits, and we understand what we're not getting out of it, we can feel comfortable with it, right? So it's newer. They've offered community land trust transactions in major cities like Seattle and Austin and other major cities. So that's why there's already a lending apparatus for it. We are one of two local lenders that are doing it. So it's us and Cable's Bank. And there's a third lender, Land Home. I think the loan officer's out of Minnesota, but they're very familiar with the transaction. We are familiarizing ourselves locally. And honestly, the intent for me as a lending professional is not to limit the pool and capture all the business. It's to blaze the trail, and then other lenders and banks and things like that will see, hey, obviously these transactions are doing it. Yes, let's figure out how we can do this too, because obviously there's a market for it. Somebody's got to do it first. So, and that's usually how it would work. But the first thing that I think we need to understand is, or not understand, but just recognize, is that it's not the typical way to acquire a real estate asset, in the sense that we're not attaining the most valuable part of it, which is the land. Okay. In transactions I've had before, I'll have a listing agent tell me, well, it's got granite countertops and it's got these floors, etc. And get it, and it's valuable. But these comps are based on location, and it's the value of the dirt that's going to call. That's where your appreciation is. In this transaction, unfortunately, there's not ownership of the land, right? It's on the improvement, it's on the structure. So, well, that doesn't sound ideal, right? But it really depends upon the the buyer, right? Like,
What's more important?
what's more important, right? And look at it this way. You can either own a home through the land trust and the city has a leasehold on it, but you know how much you're paying, your principal and interest. You don't have someone knocking on the door saying, hey, rent's going up $100 this year, rent's going up 200.
Right.
There's ownership. There is a rate of appreciation as well. Obviously, you won't capture the appreciation of the land, but you will capture appreciation from the asset, from the improvement. And that does two things. Number one, it gives you that feeling of ownership, right? And nobody likes to pay too much in the apartment they're renting because somebody else is going to take it out of your deposit. And this is yours, right? At the end of the day, if you sell the asset, it's probably going to be sold to someone in the same program as well, right? So is all lost? Not really. And there is appreciation to it. Those are the two biggest differences and benefits that I see now. As far as like taxable, property taxes are based on what's borrowed, right? Or if there's a rare case where someone's borrowing and also putting their own assets into a down payment wise, well, it's that total amount. But it's everything besides the leasehold. So if they're using the $150,000 grant, it's the remainder. Okay. And that has been, as a lender, and I don't have a problem sharing, the lender has been a very interesting conversation because the CLT will tell us it's on the improvement, and we'll pull up the improvement on HCAD, and it's considerably higher than what they're actually borrowing. So what we've had to do is acclimate the market to the idea of like, listen, when this closes, that leasehold agreement is going to dictate in an agreement with Harris County, and now the taxable value will be strictly on the improvement. Right? So $250,000 house, $150,000 grant, taxes on $100,000, right? Even if you go to the record right now and it says 155, but that's not going to be the taxable rate. But it's a question of updating guidelines and things like that. That it has its process, but that's a very important thing now. The community land trust, as far as taxes are concerned, we have been instructed to qualify borrowers based on what they're borrowing or the part outside of the leasehold at 2.8%, because that is the average for our Houston landscape. Sometimes it's considerably lower, but it's always better to err a little higher. And then also your insurance is going to be typical hazard insurance. The principal and interest will be whatever's borrowed in the interest rate. Interest rates. I know a favorite question for realtors is, so what are the interest rates? And a banker will give you, well, you know, there's a lot of things that go into it, credit and amount, and those answers are correct. I like to be a little more specific because I'm a simple person. I like targets. Rates recently we've been locking in the high 2s and low 3s, depending on credit and all that good stuff. But they're really attractive because the loan to value is much lower on these transactions. You're usually looking at anywhere from 40 to 60%. 60's on the high. It's usually closer to 40 to 50. So those rates are going to be favorable. Some of these loan programs are going as low as 620. So I never like to approach it. If anyone has ever seen me give a discussion about qualifying credit, I always tell, especially realtors, I tell them, like, listen, be aware if your client's down there, there's a reason why. Yeah, and that attitude may not change while you're under contract.
Very true.
And so you're on a tightrope there. So,
Free market.
So just play the song over and over again of like, don't do anything with your credit, your bills on time.
Yeah.
If something comes, a charge off comes up out of nowhere, immediately let us know, right? But for the most part, if it was a borrower that's just like reestablishing credit and needs time to get those 650, 660 scores up, hey, if this is the house that you want, no one is buying a mortgage. No one. You're buying a home. And you want the best terms, and we want to give them to you. But at the end of the day, and we tell buyers that to not get fixated so much on the loan. Don't get me wrong. That doesn't mean skip all past the pages and sign on the 4th page. No. That means do not get obsessed with, I wonder if the market's going to go down and then my rate will go up 0.125%. It's not going to make much of a difference in the payment. And it'll drive me nuts, right? At least it does to me.
Yeah.
If the numbers fit the way they do, then proceed. But there's a maintenance fee of $113 that the Community Land Trust assesses, and it's mainly for the maintenance of leasehold, and also a fund for repairs or something like that the home may need if the buyer qualifies or has the financial need for it. And so,
And that's included in the monthly
yes,
mortgage amount,
yes.
as well as the insurance. I've seen that they cover the insurance as well.
So no, the insurance is paid by the client, right? So you'll get a standard hazard insurance policy.
Okay.
Okay. So the payment consists of principal and interest, taxes and insurance, and then that CLT. Now, in some cases, if there's a homeowners association, that homeowners association is calculated, but it's not part of the payment, right? But it's underwritten because the idea is that there's an annual homeowners association divided by 12. This person can afford 1/12 of it. They'll be able to afford it at the end of the year, whenever it's.
Yes.
But that is the typical way that it's underwritten. And if you look at it from a qualifying standpoint, obviously you're borrowing less money, so you can qualify for more. But the important thing to do is to also remember that we're adding 113 in there that isn't normally added in a traditional purchase. So that does need to be taken into account. Borrowers or buyers that we've seen that are qualified really well for this program are, I guess, buyers on a fixed income, right? Buyers that necessarily, their priorities did not include maintaining a yard, landscape, or anything like that. They're looking for some rent control, right? They're looking for an appreciable asset, but they're not going to over time get burdened by the property taxes. They're important. You can file a homestead exemption on this transaction. Okay, so that's very important too. I like making my calls in December to my borrowers, tell them, listen, it's almost homestead time. So, get with somebody or call me back if you need some help. It's important. But that's pretty much how the transaction is working. It's a minimum for the Houston's program. It's a minimum of 70,000. So loan amount, and they will calculate what's called the front end and the back end, which it always sounds very nebulous. But basically, one is, okay, how much is the payment going to be versus your income? And the other one's going to be, okay, income, payment, and also all your other current expenses, right? So the front end usually needs to be from 28 to 33, and the back end cannot exceed 45%. And that multiple or that calculation is necessary because if someone can afford more, then obviously they expect them to borrow more, right? And then reserve those lower loan amounts for folks that are really in need of it and may require the additional subsidy. There are many other highlights to the transaction that I really like. The Community Land Trust will help with closing costs, right? So that's always a plus. As a lender, our product can also, the borrower can also qualify as their first home for an additional up to $3,000 closing costs, which in my opinion is key because then that's less money that the CLT has to put in, which means it's more money for them to use for somebody else, right? So I've never, I guess in my own fiscal manner, I never like to say, well, CLT will pay for it. Let's try to use as much of that for as many people as possible. That's what it's designed for. Correct. Absolutely. Absolutely. There is there are two different zones, either 100 and 150, depending on the location of the property. But, I think what I've noticed, and I don't know if this is 100% true or not, but some of the areas on the map that are designated 150 are also areas that are being revitalized. In my opinion, is very valuable real estate. My wife's business isn't very far from here. And so like we'll drive a lot, like down 288 in that area there. And obviously that area is changing. That's a really great opportunity for people to actually not only just buy a home, but buy valuable, right? Depending on who you ask, they'll tell you, well, people are moving in here for estate. Better prices for real estate, or land that families were holding on to for generations, or finally letting it go because it's so valuable, right? Or there's a need for housing. And I think all of those things are true, but I'm sure everyone's, when you're not only helping somebody buy a home, but you're also helping them buy an asset, an appreciating asset. I always go back to the crash in the years of 2007, 8, 9, 10. The rest of the country was getting beaten up on values. And we're one of the major cities that took the least hit because of our conservative values here, and the fact that our cost of living is lower, right? So I think most home buyers get value for what they're looking for. We're a city without zoning too, so that kind of restricts things a little less. But this transaction, I really like it because it affords that home buyer who's like, man, houses are getting expensive. When I got in this business, affordable housing was 140, 150,000. Affordable house is like 225 on the low end, right? Between the increase in materials and all that good stuff. So, rates are lower, and that helps us stretch our money as well. It's a transaction that can be a very good fit for some of our buyers. Now, as an objective lender, I'll always ask a borrower, and I'll always ask a real estate professional who's guiding your buyer, what transaction do you think is a better fit? What are they looking for? You mind if I ask them as well? And I know there's a lot of different schools of thought. I'm, as a person in the affordable housing space, my focus has always been on payment sustainability, right? Okay, so I will by default ask a borrower, okay, what payment are you comfortable with? Not because it's going to be realistic, but if anything else is an opportunity for me to tell them, listen, in this market, this is more like what you're looking at. And that means we're going to have to tighten up in other areas, right? But it's worth it if you have an asset that's appreciated, And let's always remember that value appreciation comes tax-free, right? You're not looking at the tax mat until you actually sell. And even then, if you sell and take that equity and put it somewhere else, you want it again. So that's one of the things that makes real estate so valuable. But I think that the value is going to be there. And again, like I said, for the family dynamics, ownership is key. I mean, it's the way it should be. I think an idea that's pretty prevalent in affordable housing, again, is that it's unattainable. You'll hear about grant programs in general, and it's like, they're really difficult. Well, I don't think that they're just difficult. I just think that no one's cutting checks for 30 grand, quick.
Right.
It's not going to come that way. But I think if you're focused on working with real estate professionals who are perfectly networking and working together, then it's possible. I mean, I think everyone here at this table probably heard about the article that was published earlier this year about the city of Houston down payment assistance. So there was a lady who was under contract, and she was about to lose her house, and the city was taking too long, and it was unfair, etc. There were a lot of details missing from that article. For example, home buyer never went and investigated and started the process before she got under contract. Number one. Number two, contract was written for like 27, 28 days.
Hmm.
Right? Anyone who knows anything
Right.
about the city program is
Wow.
if you can stay within 45, you won, right? And that's not a bad thing. It's just the demand is so high,
Mm.
right? That they're working through them. Now, what I've always recommended to realtors that I work with is, hey, listen, you and I are gonna have to work together to keep touching base with the city, right? Like asking them like, hey, when's the inspection coming out? You know, do you have everything you need? What else do you need? You know, because the fact of the matter is if no one calls, they're going to answer the ones that are being called about first. And it's not a mean thing. It's just how bad do you want it,
Mhm.
you know? So that seems to be a very effective way of doing it. And I think that any real estate agent can familiarize themselves with the program. Whether or not they want to do more of that transaction is completely up to your business plan.
Right.
It does help a lot of folks get into a home and an affordable basis. I mean, the CLT, I will tell you, in contrast with the down payment assistance program, they're organized a little bit differently, and their efficiency is a little bit different. And I'm very careful about the way I'm saying that
Mhm.
because I don't want anyone. They're just better than the other guys.
Gotcha.
It's a different transaction
Mhm.
with different steps to it.
Right.
Our bank, and we're not the only lender at Cadence and
Land Home.
yeah, Land Home, they have a weekly pipeline called the CLTs. So it's not like, you know, we're doing anything exclusive. But I think that speaks volumes about that team, the fact that they budget time for those updates every week,
Mm.
because that means that they are dedicated to keeping these files moving
Yeah.
and nothing going stagnant.
Yeah.
But it's been a real pleasure working with them. We've been working with them since earlier this year when we went live. As a lender, there has been a lot of learning involved. But I mean, as I mentioned earlier, our affordable housing team is dedicated to that space only. Like we don't do the one-time close. We don't do the $500,000 condos very regularly. We don't do a lot of that higher end jumbo stuff. You know, ours is affordable housing, and the majority of our clients are buying their first home, and that lends itself to a little more involvement. You know, some people call it hand holding, some people call it micromanaging the file, whichever you'd like to call it. It does require a little more involvement. So that's pretty much our experience up to this point.
Yeah, yeah. Well, I mean, I think the information you've already given is very, very informative. Do we have any questions for those that are on the Zoom? Definitely raise your hand or either put your comments in the chat there for us so that we can get those answered there for you from Omar. But I think that it's good because it opens up, I mean, there's a pool of people. I mean, we interact with a lot of different buyers, but there's a pool of people who will need this program, you know, and just having this information, there opens up more opportunities for us to be able to help more people. So I think this is great. We definitely need the knowledge and need to have this on a continuous basis so we know how the program is changing and those things that we need to know. Did y'all have any questions in regards to the program?
Okay, just something regarding the credit score.
Sure.
Those clients.
Mhm.
You said about like high 650, like give me a range so I can put it in another
No.
good little.
No problem. No problem. So the specific answer to that question is the minimum of 620.
Okay.
Minimum
Our
620.
loan product is 620, and I'm pretty sure that Cadence and Land Home is similar, if not the same. The only caveat or the only advice, professional advice I give to all realtors is just like, if you have that buyer that wants to know what the minimum is, you're probably coming in with the idea they're going to barely slip in or do what is required to meet it. And as I said, as a lender, the advice that I share is behavioral, which is, you know, sometimes, not always, but sometimes those are folks that manage their credit when they need to, but not consistently. And if you have that kind of tendency and you're under contract, and then you misstep,
Mhm.
all of that work
Nothing.
yes.
Yeah.
Because as everyone here knows, there's a last credit check before you close,
Mhm.
right? They check for other liabilities. And as long as I've been in banking, and probably another 20 years into the future, There's always going to be that buyer who's going to be like, well, I'm going to go ahead and get this car. I'm
Mhm.
closing tomorrow anyway, right? Or something. And it's not so much, I'll tell you, when I got into banking in 1999, the float, the dinosaur known as the float still existed. You cut a check, you got about 2 or 3 days before it's cashed. That's gone, right? Borrowing money and it not populating to 30 days later, that's gone. The problem, I think, happens, and this will happen, not commonly, but it happens. We're due close tomorrow. And go get credit. And they're going to closing tomorrow, and then all of a sudden there's a reason why they can't close. Maybe there's a delay, maybe the seller can't sign tomorrow. Maybe something natural happened, right? And everything is postponed. And now all of a sudden, the clock's ticking on that other debt, and it's going to get refreshed. You may have a borrower that is planning to resign from their employment, right?
Right.
And go into their own personal business and do so.
So we
Or
gotta
the
show
end of
them that we have
transaction,
no cash.
And then all of a sudden, you're checking and they're not employed anymore and everything went down.
What's the question?
Or God forbid, someone loses their job, they get furloughed. That's been a reality in the last 2 years. So the information gets out there in real time. And when
That's
it
what I'm
comes to
saying.
credit,
Like, we got $100,000 cash in there. We need to put all that in the bank. We'll put it in the
you know,
bank.
as real estate professionals, just to tell that borrower numerous.
They're gonna ask for bank statements, right?
If you
So we need
think
to-
about
okay.
it,
I got the bank
if it
statement.
feels right that you want to borrow that, call me on Sunday.
You don't have to put the whole 100,000.
But-
I'm just asking you.
Thing about it is
Here's
it's,
my question. I mean, here's
or
my
I'll get it to
question.
text message or call.
We need
on
to
Sunday.
show how much.
You know, I've gotten to know the borrower a little bit, so I'll joke around with him, tell him like, you know, the game's on, so this is important. No, Mr. Omar, it is important. You know, what's going on? You know, well, I have to do something with my brakes and, you know, and I just, you know, I'd like to charge it. I don't want to go into my own money.
Yeah.
I can't tell you what's going to happen. You know, if you have the funds, do it. You know, don't borrow any money. I'd rather that and not have to give bad news if something happens.
Right.
Yeah, exactly.
So, and I know real estate agents. That's a banker thing.
Yeah.
I'm just joking.
All right, we got some other questions here. It says, is there a map available showing the areas that qualify? It's one, and is there a list of qualifications?
So the first question there is, and it's on the Community Land Trust website. There's it's kind of has a legend and color zones, et cetera, that show, you know, which areas qualify for 100 and which qualify for 50. There's a list of qualifications on the website as well, mainly pertaining to income. The income requirement is 80% of area median income. So, but it'll also work off of household size, right? So the income limit will be for a single person household will be one limit, and a household of 3 or 4 or 5 will be different. And that's all drawn on HUD numbers. So lending qualifications, that's probably going to be more from your lender, but there are some general ones on the website.
Perfect. Well, good.
Is it like standardclt.org?
Yeah, I think it's at HoustonCLT.org, if I'm not mistaken. I can get you the link when I get back to the office.
All right.
But yeah, you probably, I know I searched it.
Yeah. So guys, just if we'll get that out there to you. But like I said, this video, this training here will be recorded. We will also, I think Mike's is trying to come in and say something. We'll also make sure that you all have the access to the website. Go ahead, Mike.
Hey, Omar, man, I so appreciate you doing this for us, brother.
Anytime.
So my intention was to be there, but I got called into a company introduction, and then I caught in between meetings, so I just had to stop wherever I was so I could get that Zoom meeting out of the way. But I know we're recording it. For a very long time, I've been trying to get someone to come in here and talk about this program because it is a phenomenal program that we can definitely utilize, especially in our market and in our marketplace and in our community. So I really appreciate you coming in. You came in with us for the real estate summit at the last minute. I like literally called Omar the day before the summit. Was like, brother, I need Emoji Bank. or somebody that about this community land trust, because it's just been having challenges with their representative, and Omar showed up. He showed up for the training for us, man. So I really, really appreciate it, man.
That's not a problem. I mentioned to the team here earlier that if we wanted to do something like this, maybe once a month or with some regularity, just so I could share any updates, I'd be more than happy to do it. Don't get me wrong. Darren Blakemore and the team over at Community Land Trust are great with updates as well. I'm just happy to do it from a lending perspective. And
Yeah.
I can honestly tell you that the updates will never be like, hey, here's how you can work with them. They'll be program specific. And I think if we do it from that end, then, you know, the great thing about having 3 lenders is that there are certain things that Land Home can do that we can't. And I'll give you a real good example of one that's going to stick out of everyone's mind. So Land Home can work with an income-based repayment for student loans. Okay, so if you are on an income-based repayment plan and they're giving you a $10 payment and that's what's going to be required to make your transaction work, they can do it. We can't. We're going to work off of either 1% or 0.75 if it's over 100,000, or if your student lender gives you a fully long-term amortized payment, then we can use one of those 2 structures. And what I've told borrowers before, it's like, listen, I can't see making this deal work any other way than by income-based. Let's get you over to Land Home. They can do it, you know?
Wow.
And then gets a house. Yeah. I mean, and then there are other things that we can do that maybe Land Home isn't able to, but either way, it's all about directing the client to the better option for them. That's it.
Yeah.
Like you said,
No,
the program grows.
that's great, man. And like I love the way that you said that, because what it tells us is that we can start, have you all look at it before we entertain the other lenders. Because our relationship with you, like I don't have a relationship with Land Home, Land Trust, or any of the other lender. But if you guys are transparent enough to, if you can't do the deal and you all are familiar with what they can do and give us that level of direction and guidance, that does mean a lot as far as our relationship.
We're here to serve. No problem.
Yeah. So no, I agree with you. I think it would be great if we did this on some level of consistency. So I'll get back with the team and we'll talk through it as we begin our planning for the next quarter.
We have two loan officers listed on the CLT website. We're under the tab for approved lenders.
Mhm.
So you'll have Eli Bettis for our Spanish-speaking clients, and then we'll have Kashana Bray also. And I think that's important to mention because this business is also about personalities, right? So being able to offer more than one option, I think, is necessary. I myself and my associate, we also originate, but we wanted to kind of give an opportunity for all of our loan officers to be able to work on it should the personality match better with someone else. So, you know, we're definitely vested in offering all the options that we can within what we can offer. So,
That's great.
yeah.
Awesome.
All right. Well, just that's all the questions that I had, man. I don't have anything else.
All right. Thanks, Mike. Well, guys, everyone that's joined on, if there's no more questions, we're going to end this training for today. But I want to let you know, again, we will have Omar's contact information there available for you all, as well as the information. I mean, you can definitely Google the Community Land Trust to get information about the maps and qualifications from different lenders. But definitely thank you all for tuning in. We'll get this recorded and up for you all to review. All
And
right.
y'all come, hey, look, y'all come to Lupe Tortilla at 3:30. I'm popping up.
All right. Lupe Tortilla happy hour. There we go.
All right, man.
Sounds
I'll
good.
see
You all-
y'all soon. I'm on the way to the office
All right.
now.
Sounds good. Bye. Y'all have a good one. Take care now.
Oh, we have a message. Hold on.
Oh, wait. Thank you. Oh, Linda said,
Oh,
thank
it's
you,
a thank you.
Omar. Perfect. I'll stop the recording now. Let's see. I think I can do it. Stop recording. Make sure you want to start recording.